And welcome to today's Morning Report Charts Appraisals on Friday the 6th of October with me, Rich Perry, market analyst at Hantec Markets. It's Payrolls Friday, and in Payrolls Friday we've actually got a really strong dollar coming through still. The strong dollar came back into play yesterday afternoon with some hawkish comments from Fed members John Williams and Patrick Harker, and that's pushing out this dollar index to 14.1, which is on the brink of that August high, and that's come across all these markets really. Euro weaker, sterling weaker again, yen weaker, and all the other majors as well. We're seeing gold sort of relatively settled, but this gold price is still under pressure on a sort of a near to medium term basis still, and the oil price is fairly much settled as well. But what we have seen is Treasury yields starting to gain traction again on the 2-year and the 10-year. So this dollar strength is still coming through. This is on Payrolls Friday. We've got payrolls today. And we've got a payrolls report that's going to be a bit of an odd one actually, because we've got the impact of all the hurricanes that were seen last month going to be coming into the data. Expectation of 90,000, down from 156, will be an interesting one, because I think there's going to be quite a significant sort of fluctuation around that number. I can't see, well, certainly I read Goldman's were coming in at 50,000, for example. So there's going to be quite a considerable hit to jobs growth last month from the back of the hurricanes. But I suppose the argument being, if it is a bad number, the markets will they just shrug that off and say, well, it's just hurricane related? And if it's a good number, will they just say, yes, this is a strong number because it's a strong economy? So I think generally speaking, this dollar strength is likely to sort of come out of this payrolls report. Let me show you the charts. ADP yesterday, on Wednesday was 135. That was ahead of expectations. Payrolls recently has been dropping away anyway, but certainly I think the expectation of 90,000 is still to come through. Now, unemployment will be interesting, 4.4%, and also average hourly earnings. That's the wrong one. Average hourly earnings growth, 2.5%. Will that 2.5% continue? That's been there for the last couple of months. Will it remain at 2.5%? The labour force participation rate, 62.9 last month, ticked up, or actually flat, but has ticked up in the last few months. That'll be an interesting number to watch as the US sort of moves towards looking to turn around this average hourly earnings growth through the Phillips curve. So Phillips curve meaning that we're sort of at or around full employment, so subsequently the labour market tightens and subsequently average hourly earnings start to pick up through that. So that's the theory there. So my chart of the day is silver, and what we've had on silver, as we have had with gold, is this sort of downtrend channel that's formed over the last few months. Last couple of sessions it's tried to move higher and failed, and again yesterday it's sort of posted a pretty negative looking candle that is hovering around that support around 1650 of that late August low or mid-August low. Breakdown below that would open 16 big figure really to the downside, so you could see continued negativity through the momentum indicators. RSI mid 30s, MACD lines negative, stochastics negative. It all is pretty sort of negativity set up to sell into strength on silver, and again yesterday the market came in to sell at 1675 before falling away. So I think downside pressure is likely to continue. A strong payrolls report, or certainly a better than expected payrolls report, is likely to weigh on the silver price and break to the downside below 1650. So that would be my continuation, the continuation of the downtrend channel, and likely to see 16 big figure at some stage in due course if that were to be the case. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.